Guys, why is this coin pumping?
I'm Justin Bebis. I'm the founder and CEO of a company called Conclave. Conclave is the largest DeFi engineering firm in Web3. Our purpose is to build the best technology. Since 2020, we've been breaking records in the space. We have the fastest growing project of all time for DeFi, 0 to 4 billion in a week was spearheaded by our team. Beyond that, if you've ever been on the Phantom Network, our Reaper.farm app back in the day, the biggest project ever without a token or without private investors. So we're really strong believers in fair and equitable launch mechanics. And that was kind of our 2021 era. In 2022, after DeFi yield products lost a bit of their product market fit, that's when we really tried to become a solid engineering firm. And I think our biggest win in 22 was with the Radiant Capital team. We built their V2 platform, which was, I think, one of the success stories of the bear market. We're looking to replicate a lot of that success on Ironclad. And, in 2023, that's when we really figured out how to do business development. It only took 2 years. We teamed up with Optimism. We teamed up with teams really across the industry to start building what is now the biggest portfolio of DeFi technology, period. Really, the story of our company is a story of people who are committed to being the best engineers in the space, maybe at the cost of a little bit of marketing and a little bit of business development. And our goal in 2024 is to remedy those weaknesses and work with teams and syndicates like HCC to make awesome software that has a lot of upside that people will adore, and most importantly, maybe is really secure, easy to use, and has an exciting growth cycle. So we'll always be accelerating faster than anybody else. Ironclad's our baby right now, and we're excited to help Mode really break into the L2 scene harder than it already has. The funny thing about crypto is we have some AI engineers on our staff, and we look at the AI projects, what they're pitching, and then we look at what they're raising, and it's like, how many teenagers do we know that could whip out what they're pitching in a week or two? We try to be the antithesis of that, and a lot of these vaporware projects, it's just examples of good marketing. It's easy to just be like, oh, vaporware, it's crap, but what we've been trying to do is be like, okay, how can we compete with them on the marketing front and actually deliver good tech? Being an engineering firm, kind of evolving into this studio, it's like very interesting opportunity, I think, where we're really committed to the mid-market, we're really committed to retail, and making stuff people will actually use. It's different, and I know there are other teams kind of committed to this sort of thing as well. But I just hope we see more of it, and maybe all of the airdrop dumping is gonna clue VCs in that retail is tired of their crap, and we can see some interesting new ways to capitalize and launch projects. You're going to see our technical expertise and our speed and security to market come into play. Already we have the one-click looping feature on Ironclad, which allows you to lever up and de-lever. You can essentially trade perps on Ironclad. Obviously, they're not synthetic, but day one, for example, of the ICL token, we're going to have staking. The staking is going to be really robust. We'll have the revenue sharing. We'll have kind of this wiring and these guts that a lot of projects are going to be missing for a while because it's deceivingly difficult to kind of engineer these mechanisms. And then beyond that, once we launch the IUSD stablecoin, once we kind of push further into our roadmap, I think it's really just going to be night and day difference. And it'll take like a user to see that for the first little while, but even like at the UI UX level, we have a fabulous kind of principal level designer working on a total overhaul. So we just want people to always see action, always see excitement, always see new things. And that's kind of the goal with Ironclad. And we have 20 engineers on staff. We have security researchers on staff. And all of our engineers are senior staff, principal. We've been doing this for a long time. So we know what users want. We know how to get there, and we know how to do it in a very safe and expedient manner. If you've ever read like Paul Graham's like Y Combinator blog posts, etc., it's like he says if you're not embarrassed of your first product, you're late to market. Obviously, Ironclad is pretty polished, but you look at it, it's a little rough around the edges. You see some of the like default looking buttons, and our goal is just that if you check your position 1 month, maybe you deposit, you check it 3 weeks later, it's like, ooh, a new exciting little thing. When you're building yield products, the goal is to let people set it and forget it. It's like, okay, put this down, go somewhere else. We're gonna do the needful for you, and when you come back, hopefully there will be something new to do. And I'll tell you, an issue that we've had historically is we ship too fast, and we don't let the technical development stew and kind of get people excited and hyped about them. So what we're going to make sure we're doing is talking to you guys relatively frequently so that you know what's coming up, and we can develop kind of plans to get people excited. And really, like, every new feature should be a catalyst for growth. And we'll have a line out the door of new features and a lot of ways to kind of package them up and make them exciting.
We have discussed this before, but I'll just say it again, on a public forum. I think for many of us in HCC, we love to invest in projects that have upcoming technical catalysts. It's always so exciting from an investor perspective, and it's really good to look forward to new products and innovation and hype coming out. I also think from a holder's perspective, it feels more like you're investing in a blue chip tech company than just I don't know how people can hold meme coins. Right? I just don't know how you can do it. I guess, they're way more volatile, but from a holder's perspective, it's so much more reassuring if you've got big bags, or it's all relative, but just knowing that you're actually sort of investing in a legit project, and the technical catalysts are so exciting to show. So that's how we've always done it.
One of the things that really attracted us to Hype was the fact that they're one of the biggest, Mode, which is backed by Hype, they're one of the biggest marketing firms in the business. If you just think about the synergy, okay, what happens when you take the biggest DeFi firm and what happens when you take the biggest marketing firm and you slap them together? Really, I think we're already seeing a bit of the magic. Their OKX campaign, we did a 30x of our Twitter followership. We're seeing higher engagement, higher views, people joining our Discord in droves. Extremely exciting. And a lot of that is thanks to kind of the free support we get from the Hype team. And, taking that a step further, our mission going into TGE is to make sure that there are enough voices in the room. And there's always, the kind of trade-off between number of voices and quality of voices. So if you remember way back in Q1, 2 months ago, all the KOL projects with 600 influencers invested, this, that, the other, doing the craziest things. I think the market is really tired of that. I'm personally pretty tired of it. I think we're all okay, you're shilling something again, great. So really our focus into TGE is let's find ambassadors. Let's find people who care about the tech. Let's find people who care about the network. The founders of Mode are angel investing in Ironclad. They're going to be helping us along with the Hype team really kind of get the word out in a way that's totally sensible. And really, our goal is not to have the world's hypest, Burj Khalifa type launch. The goal is to create upside, infinitely and hopefully grow into a staple of DeFi, along the way, obviously, make Mode a staple of DeFi as well.
Music to my ears. I just want to say, I've been operating in this space for a long time, and sort of got frustrated with how much VCs had sort of riddled the space, and it really annoys me just seeing retail getting taken advantage of. It also sort of triggers me seeing people raise so much funds to build vaporware, and it's just garbage. And it's all right, why are you raising all this money? Retail gets wrecked. And then you're talking about equality and decentralization and governance and this and that, but that actually isn't the reality on the ground for retail, and it's meant to be about retail, in my opinion. So I love this approach, especially in DeFi. It's so refreshing to see, and that's when I had the opportunity to meet you in real life. That what you said, that just resonates with me personally, the rest of the HCC community as well. And that's sort of the projects that we are proud to be associated with.
Yeah, long story short, there's an edit for you. But long story short, we really just want to make sure that our execution marketing wise is great, but obviously like crypto marketing has worn a little bit thin. And you look at all of the most hyped launches that everybody is aware of, everybody's excited about, total dump fests. A lot of our energy is going into managing the secondary market. We're partnered with some prop trading firms. We're partnered with some market makers, liquidity partners. And, we sit down with them in meetings and we're like, okay, we look at the writing on the wall. We know what happens when people get tokens in their hands. And at TGE, that's the point where we can kind of make or break the project long term. So really, we're looking at accumulation strategies for the ICL token. We're looking at accumulation strategies even for the mode token and for ways that we can deepen and harden our protocol on liquidity. And the best marketing is, I don't even know if, I'm going to say it, but the best marketing is number go up. Obviously, there's no way to guarantee that, but we believe that if we do a really good job executing in the secondary market and executing on our roadmap, then, success will beget success, and the rest is kind of a story we'll let people write about in their Twitter threads when they talk about Ironclad and HCC being the new barons of the universe. We're going to buy Dubai, guys. Just kidding.
That's just the correct approach. You couldn't agree more. Really, the level of professionalism and expertise in your team alone, never mind people who are parking liquidity there, speaks volumes, and that will result in a lot of volume. Really refreshing to see. I personally don't want to park funds on a platform that, the team isn't professional or doesn't have a security first approach. Posting memes. I post memes, but I don't have everyone's cash. I'm not responsible for everyone's cash. Sure, I'm responsible for maybe, brainwashing people, but I like to do it in a way where I don't think I'm brainwashing. I think I'm freeing their mind. But if I think whenever you take retail's money and stuff, I've been in opportunities before and people have said to me, oh, should we raise? Should we do this or that? I've always rejected it because I know then I would have to really step up to the plate, and it's not that I shy away from challenges, it's just not my priority right now. So I think whenever you take anyone's money, retail or VC, you got to really have that expertise. You really got to have that long-term vision. You can't be shooting from the hip like a cowboy, and a lot of that goes on these days, and it's just not normal. It's in traditional tech, you'd be, it's cutthroat. I've seen tokens that are down 98%, and then the team is posting pictures of them on an offsite, and it's like, what are you all doing? Everyone's wrecked, and people are like, yeah, go, and then people are still supporting them, and it's like, come on, guys, get a grip.
Common sense, decency, integrity, ingredients for long-term successful outcomes. I was very lucky in 2021. I was able to, build up the financial security required to leave my job, start our engineering firm, commit myself to crypto full time. And I'm totally in love with this industry. I don't sell tokens. Like when a token lands in my hands, my thought is never to sell it. And I just wonder, why it's cringe. How much do you need liquidity? How spread thin are you? What sort of liabilities do you have hanging over your head that, you need to sprint to the market to sell before everybody else? It's just chill out. If you're going that crazy that you want this 24-hour time to liquidity, maybe they're just a gambling addict, or maybe they have a Lamborghini payment from 2021 that's accruing a lot of interest. They need to pay down on it, but it makes no sense. These people talk such a big game, and it's dude, if you're talking such a big game, why are you so desperate for liquidity? why are you rent seeking on the heads of founders and your followers? It's ridiculous, but we know it's ridiculous. It's like, that's why I think, teams like HCC, like what KOL is sitting down for a podcast? What KOL is strategizing with the teams? It's few and far between. Obviously there are great, promoters and influencers, but there are a lot that seem to like share just a handful of brain cells. It is what it is, but yeah.
You did mention it, that the people being sick of KOLs and stuff. I mean, like, what a lot of these guys do is they just get free tokens. They don't disclose that. They tweet about it when it goes up. There's so little liquidity, it's hard for it not to go up. And then the way they show it is like, it's up times 50 from when I called it. And it's like, why would anyone buy it now? It's just about your ego, right? And then it dumps, and then they never talk about it again. They're in tax havens, and then they shill another one. It's rinse and repeat. And I don't know, and they bought their accounts with fake followers, and they bought it with engagement, and half of them don't even write their own tweets. They outsource it to people, right? So like, we at HCC call this out. I'm actually blocked by a lot of them, and we've made t-shirts and stuff just to troll, just for fun. And also, I mean, if they really did make money, they would actually plot and cared about their followers. They would do what we did, which is start your own LLC and get people into deals, and that allows us to continue calling these people out. So, I mean, and it's not like my moral compass is like, it's not like I think I'm Jesus or anything. I just have some bloody integrity, and I enjoy not wrecking my mates, and I don't want to get wrecked either. So, I mean, it's not that difficult to do. So if they actually give a damn about anyone other than their own ego, they would do what HCC is doing, and we will continue to do it. And we will disrupt VCs, we will disrupt KOLs, and we're having a laugh, and we will support and promote the right projects.
The really cool thing about Ironclad is we kind of have infinite flexibility, simply because of what I mentioned. We have a big portfolio of technology, a lot of expertise, and really, when we look at a network like Mode, it's about finding where we can fit. If you've ever read the book Small Giants, it's all about companies who decided to not do the IPO, not do the crazy listing, but instead focus on having bigger margins, better personnel, better user experience, etc. And, we kind of take a page from that book, being our goal is that per token in existence, we're capable of producing the absolute best outcome humanly possible. What that means is we're going to entrench ourselves in this mid-market. We're going to find the highest value, highest ROI niches, and we're just going to own it. Because anybody kind of maneuvering onto the network, we know is not going to be able to outperform us when it comes to stable coins, yield products, or derivatives. We're going to see Mode mature quite a bit. And obviously, right now our goal is we want to financialize the Mode token. We want to create this IUSD stablecoin. We want to make it the best place to get credit on your LRTs, on your Mode tokens, on any of these kind of interest-bearing collaterals making it onto the network. Long term, you're thinking of how can we satisfy long-tail markets? I look at Ionic and I see, okay, there's obviously some VCs, some really sticky liquidity just parked in there, and there's not a lot of borrowing going on. So Ionic isn't making a lot of money. They just have a lot of TVL. And that to me screams like, hey, if we get our revenue share, if we get our token staking totally at the highest level, it's really game over. Anybody that kind of floods onto the network and looks at, hey, I can go here, maybe they can figure something out, or I can go to Ironclad and it's like, oh, they have a mission. They know exactly where they fit. They know exactly how to make money, and they know exactly, how to make stakers super happy. I think they're just going to choose us every time. Per Ironclad token staked, how can we drive the absolute best value? You look at modern DeFi, a lot of people are stuck in 2021 where they see TVL as this end-all be-all metric. Look at EasySwap. They're Bitcoin TVL, so they onboarded probably through Kobo a bunch of Singaporean Bitcoin whales. And the EasySwap team is great. But if you look at that 100 million or so TVL, look at the volume it's doing. Look at the fees it's generating. It's almost negligible. There isn't enough volume, there isn't enough capital on the chain to really move that pool at all. And we're seeing the same thing on all these headliner apps. If you look at Ironclad, everybody that we're onboarding is experienced because we have the looping tools. They know, hey, I'm going to use Ironclad. I'm going to have a safer experience. My risk is going to be managed better. I'm going to be able to loop and unloop in one click, gain max exposure to the mode airdrop, et cetera, et cetera, et cetera, et cetera. So, you're going to see us kind of outperforming in that capacity in every angle. And that's really our goal. And capital costs money. Ionic, for example, anytime you have, 90 million TVL, 80 million TVL, whatever, a price tag is attached to that. And if you aren't making enough money borrow side or through the products you're creating with that TVL, then it's dead in the water. It's like a wash. So really it's like, if we're going to talk to a whale and say, we want maybe $2 million of TVL. This is what you can expect for it. Here's the market interest rate. We know that when we onboard that TVL and we give them kind of our, mandate, that we are going to make enough money for stakers to have a positive margin. And that is what DeFi is all about in 2024. Getting the absolute most capital efficiency at the protocol level, which obviously translates to users and translates to stakers really well. Some alpha for listeners, like I kind of mentioned earlier, we started and we still are to a large extent an engineering firm. And one of the secrets that some people know, some people don't, is there aren't anywhere near enough blockchain developers to go around, especially DeFi developers. Like our team probably has a double-digit % of the senior DeFi engineers that are currently working. A lot retired in 2021. Maybe that's an overstatement. Maybe it's high single digits. But teams will have the founder that's really good at marketing, really good at product. They'll be able to raise the money. They'll maybe even be able to keep things moving for a while. Maybe they'll be able to borrow from OSS. Maybe they'll be able to find a talented developer and align with them. But when it comes to creating the systems that produce quality software and success, it's hey, maybe I hired Conclave, or maybe I hired this talented kid I know. They worked for me for one cycle. I was able to get a product out or an MVP out. And then it's I ran out of money. That is so common in crypto. And, those are the teams that are the successful teams that are even able to make it to having a live product. And really going back to the vaporware situation, it's even projects with, millions or tens of millions of dollars in funding just don't have the talent to deliver. And a lot of those teams, we know this because, some of those teams rely on us. And obviously, that it's good business, but, having that first party commitment to a platform like Ironclad on the DeFi end and DeFi developers that know what the hell they're doing, they're the rarest of the rare. We're going to see over time so many slip ups from competitors and so many competitors kind of rise and fall. Ironclad, it's going to be fun because we're just going to keep chugging along, keep shipping. I like it when people see the trajectory of positive growth on the technical end and obviously in the secondary market on kind of the awareness, marketing, business development end. I just want IUSD to be everywhere. I want Ironclad to be everywhere. I want people to just, when they think mode, immediately think of Ironclad.
You said something there that really resonated with the quality of of the team and the people. I always say product is important, strategy is important, but people beat strategy every day. And if you have the right team and the right people, and I don't want to sound like a San Francisco based hipster, but a diverse team is really good as well, because when you're brainstorming and you're around the whiteboard, this and that, the more diverse your opinions, the more likelihood you're going to resonate with more people. So I have had the opportunity to work in very diverse environments all around the world. Great female engineers. I don't want to be too controversial, but thought that females like didn't like engineering and tech stuff, but then I had the opportunity to work with some of the best and brightest, and they were fucking shit hot. So like they were organized. They would tell me what to do, and I'm okay with that. I don't have an ego. So I think that's really cool. And I think just your second point about like launching your own like stablecoin stuff. We've obviously seen like UST go to zero, this and that, but just like Ironclad just screams security, it screams stability. So it's such a good marketing tactic, and like it has to be secure, it has to be stable. It's such a healthy balance, because I have a friend who I won't name. He lost a lot of money on UST, and losing money on altcoins is one thing, but losing money on stable coins, that's meant in your head, that's in the bank. So like that's a real kick to the balls.
Let me kind of start at the root here a little bit. In the world of DeFi, there are three places that we hire software engineers from predominantly: aerospace, defense, and fintech. The commonality between all of these and DeFi is the management of high VAR, or value at risk systems. This is an approach to software engineering, building these high VAR systems, that is totally different from creating a Web 2 app or creating, a game or anything like that. It's kind of like, really, you sit down, you think of what are the attributes that make a system great. For a game, it's going to be speed and performance a lot of times. For a Web 2 app, it's going to be like UI, UX, responsivity, feedback, etc. But for DeFi, aerospace, defense, and fintech, the number one is security. For kind of this paradigm of software engineering, there's a school of thought that's referred to as DevSecOps. So DevSecOps is essentially a way to express the software lifecycle in a high security, high VAR production environment. Kind of touch on it at a high level. Essentially, first, it starts with intelligent design. Whenever you're building a system like this, if you're a junior engineer or even a mid-level engineer, when it's time to build some software, you might just dive right in, have a clean editor, start going ham, be productive, get in the zone, whatever. And sure, you can do that if you're prototyping in one of these industries, but when it comes to creating production software, you sit down and you map it out. There's this kind of practice called risk storming, where once you map out the architecture, once you make all the design decisions, obviously with security and reliability at top of mind, you essentially look at every kind of module of the system. You look at every part of the system and you think, how can I break this? How can I deny service here? Mess with the accounting or create some imprecision? How are we going to be rounding numbers here? These are all things that are really, really important. Once that session is done, and there might be multiple sessions here, that's when you start building things kind of piece by piece. We have kind of a few tools, obviously, at our disposal during the software creation process. Essentially makes fuzz testing and invariant testing an order of magnitude faster and easier. What fuzz testing is, it's essentially you create a test. Testing, if you've listened to me talk on any of these mode developer relations talks with Celestia or whoever, I scream about testing nonstop. So I'm not going to scream about testing now. The first thing I look at when I deposit into a new DeFi protocol is I look at their tests. If you look at, for example, our stablecoin systems tests, not only did 154 auditors, penetration test it, a lot of which some of the best professionals in the space, but they did it with a working test suite. So, when you're an auditor, if you need to write all of the tests yourself, then it's like game over. You're paying $1 and you're getting 10 cents worth of work. But if all of your tests are written, and for the auditor, it's a matter of, hey, let me change this and see if I can break it. Let me change this, see if I can break it. Let me do this, see if I can break it. Then you're getting 10 times the value. And that's where teams really mess up, is they go to audit. They're like, okay, the auditor is going to look at it. Awesome. And they don't have an adequate test suite. And I'll say this to anybody that's interested even in getting into blockchain programming. It's like you need to learn how to test before you do anything. You need to learn how to use AI to test faster. You need to learn how to use Forge to test better. We have over 10,000 lines of tests for our stablecoin system. And, you look at Raft, you look at Prisma, you look at all these teams that are getting exploited, you noodle into their test suite and it's like, dude, it looks like a junior wrote this. And that's really the big differentiator. And it's like our thesis is, hey, if we just, make the best, most secure software, all of our competition is just going to shoot itself in the foot trying to keep up. The tortoise and the hare, where we're just constantly chugging forward, doing everything right that we can. And, everybody else is maybe sprinting because they're trying to get, push a prototype into production, but 6 months later, they're, bleeding on the side of the road and we just pass them up. It's how we do things. And we've been doing it for 4 years. And I would say, like, with kind of our tortoise approach, we've already, our technology right now, some of it pre-production in the final stages of auditing, but we have the most advanced tech and research in the entire industry. And I can say that pretty confidently. Like, I'll stand up to your Aves, I'll stand up to your Morphos, I'll stand up to your Oilers. And sure, we don't have the VC backing. Sure, like, we're revenue funded, so we don't have like an insane marketing and market validation, but it's a matter of time. We know that we can outperform and outpace everybody on the tech front. I think the mode alpha is, even with the dumping, a lot of the airdrop farmers that I know were on the network, they were marking the points down at a 500 million FDV. And even after the dumping, mode is above that. I think they totally killed it. I think it was a really big success on their part. And to me, they're just handing us upside. Think about, they're not on Binance or OKX or Coinbase yet, which seems to me like an inevitability. What I know about the super chain, what I know about optimism, what I know about Base, all of this stuff is like, they're leaving these catalysts. Because normally it's like VC, like hyper-funded projects, they suck up all that value before they hit the market. And it pisses me off. But mode is like, hey, grow with us. We're going to hit the market fast. We're going to hit it hard. And we're going to give you an opportunity to see a lot of this upside as we move into the upper market and achieve unicorn status. They know how to make a network stick. And all these VC funded projects we see airdropping at infinite valuations, they're just going to get rinsed. Like, once the bear market hits, LPs, all these LPs are going to withdraw, and they're going to have to sell down all these tokens, and they're all going to go minus 90, 95%. All the VCs saying, oh, we're committed long term. And it's like, well, your LPs aren't, you jerk. I think what we're going to see with mode, because they had a very focused on angels, focused on people who are using their own money to invest, focused on people who are in the industry and committed truly long term. I think they're just going to win. Literally the VC dumping, everybody that's dumping these VC coins at $5-10 billion FDV, the tokens that they're going to be buying are the mode token. They ripped the Band-Aid off in a big way. They let everybody with liquidity that wanted to sell. And we've seen it time and time again. The energy will return, and a lot of those people will get priced out. So I don't like talking about, the market and whatnot, but I think it plays such a big role in launching and in ecosystems, and lower price equals better for us, especially right now. We'll release some literature about our team's mode accumulation strategy, how we're building up a lot of mode ICL liquidity so that ICL will grow alongside the mode token. The mechanics of that, if you're not super DeFi familiar, are pretty interesting. But, the goal is, if you want mode exposure and you don't want to buy a huge FDV token with a lot of overhang, you just buy Ironclad, and then you basically get leveraged mode exposure. And that's what it's all about. When you are creating financial software, you're securing math. You're making sure you didn't mess up your math. And what fuzzing does is it takes your function, it takes your math, and it throws every variable it can at it randomly across the entire spectrum of numbers. So, it could go as small as, 1 e to the negative 18th, which would be one way. And it can go as big as quadrillions, or higher. It penetration tests it nonstop with billions of parameters, billions of attacks. And we do that essentially from 100 different angles. And this is all what we do before an auditing session. And, as well, and I'm speaking a little bit to the programmers here, but if you think about functional programming, you think about how to build intelligent abstractions so that systems are easy to secure. I just knocked down my bookend, but that's okay. If you've ever read this bad boy, Structure and Interpretation of Computer Programs, this is the JavaScript version. I highly recommend it for 2024. But it's all about how do I build in a way that when I want to change something, or when I want to analyze something, or when I want to secure something, how can I ensure that it's as easy as humanly possible? If someone's bragging about having a 10,000, line code base, like, oh, dude, we're the smartest guys ever. We've got, 1 million lines of code. We're so awesome. That to me tells me they're noobs, and the smartest engineers, the most experienced engineers are doing that same thing with, a tenth of the code. So, all of this to say, this is everything we do before we audit. Many code reviews, many internal audits, and then you look at the next step. Okay, auditing. What happens when our team is freaking tired of the code base, when our brains have turned into jelly, internally auditing these things, testing these things nonstop. We could look at it and not even see it at this point. It's just like a big homogeneous blob of text. At that point, we look externally and we think, okay, who are the best auditors? I'm not going to get into that, but let me kind of tell you what I think is the best auditing approach, which is the approach that we're taking now. And our stablecoin system, our lending system has experienced some variation of this. But right now, it's like, okay, let's get the core of the system done. Let's get all of the highest risk building done. And let's send it to the highest tier auditor, which I think is either Trail of Bits or Chain Security, I think is up there, Spearbit, Open Zeppelin, a firm like that. Let's send it to them. Let's have them. And the reason you send it to them is because you know exactly what you're going to get. They're selling a security product. Let's have them look at the binaries. Let's have them look at the bytecode. Let's have them test it, fuzz it. Do some formal methods, and turn that into an awesome, workable core accounting system. And then let's build periphery around it. And from there comes like, okay, your routers, your zappers, the other sort of interesting things that make the system more usable and more feature rich. And then from there we go to, okay, let's think about the hackers. If you've seen these bounty platforms, Code Farina, Spearbit, Hats.finance, Code Hogs, Sherlock, all of these things, we essentially figure out where the meta is right now, because they're always like fighting each other to be the most valuable. Where can we get the most bang for our buck? Okay, let's send it there and have 100 hackers try to destroy all of our periphery and also re-audit the core system. Great. At that point, I think you've got a piece of software ready for production. So then we push it, one step further. We're like, okay, what happens when it's in production? And this is where a lot of teams drop the ball. Monitoring, emergency response, operational controls, processes even in general. Like, what do we do if this happens? What do we do if this happens? Our team started as a DevSecOps firm. We were managing billions and billions of dollars, creating these processes, helping people in their war rooms, helping people with emergency response. And that's to say, like, if someone hacks your protocol and you don't know what to do in 1 second, the difference between, hey, I'm hacking your protocol and, hey, I'm offboarding on fixed float or some non-KYC centralized platform, a reaction time of 1 minute and 1 hour makes a universe of difference as far as like, your forensic control. So, we work with teams like Chainalysis. We partner with them. They're on retainer. If anything ever happens, even if it's like something that is someone from North Korea using our platform and doing a big ARB or whatever, they're willing to chase them down, which I would say, like, recovery, like auditing, you can only be so good. You know, you can be 99% sure, you can have all the test coverage. I think, you know, we do as good as you can do, but there's still that 1%. Whereas if you have a recovery plan in place, it's like, you know, you have the full circle. And, you know, really once you get to that point, I mean, we have all of this technology in-house. You kind of get back to the beginning. It's like, okay, what's the next feature? What's the next thing we're going to make? Let's push it through the process again and again and again until we have like a really amazing piece of software. So that's going to be very boring for a lot of you to listen to, but hopefully enlightening.
I love it. Well, I think it's, firstly, I just want to comment, like, I've worked in a lot of engineering teams, this and that, and like the culture you have is spot on, because I've seen a lot of people don't care about security. They will they write sloppy code, they introduce like out of date modules or whatever, because they just don't really take security on board. And yes, people just rely on auditing firms because you wash your hands of the responsibility. But if you actually instill that security first approach, you know, it's just getting into that discipline, and then you can produce code quicker. You know, you don't need to rely on third-party people who may not, like, you know, they might drop the ball. So certainly, like, those checks and balances are really good. And I agree, like, with, you know, you need a red team, a blue team. You need to think about all this. And yeah, just in crypto, it just doesn't happen. It's bizarre to me.